Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, Euro dollar, a bullish white Mariposa and third bullish white soldier yesterday after the previous session's bullish closing white Mariposa. This time prices broke out and closed over the very recent mid-June to late July bright red ascending wedge pattern, currently 114.23 to 114.98, closing also over the green short medium moving average, currently at 114.90, as well as a small congestion 114.82 to 114.95, made up from the January and February 22 highs respectively. As a result of this, I will after this commentary retire targets X and X1 below at 113.54 and 112.53 respectively, as I now consider the move down late last week and at the start of this week to be a false break lower. I usually manage to pick up these false breaks, but not this time. However, I'll also not lay out any targets topside for a break higher out of the ascending wedge pattern, as we might also have a false break on the top side, so watch this space. In the big picture, we are still well within the bright green late January to mid-April bearish shift pitchfork, which is the main driver in this market right now, just underneath the bright green upper tine, which is currently at 115.5. Indeed, I think this bright green upper tine, along with the now flatlining mauve medium moving average, currently 115.68, may have capped yesterday's rise. There's also two other new patterns that have developed this week of all the actions we've seen. The most immediate one is that we are set up today to make a weekly key reversal here. Thus, if we close tonight either over 114.39 or under 114.13, then we'd be on. Anything in between and we will have a lesser outside week. Right now, we are looking at a weekly key reversal up. The second pattern to consider is to look at the whole mid-July to-date action as a possible double bottom, Adam and Eve type. We have broken and closed over where the neckline would be at the January 22 high, but we have only had the one close so far, so it's not a confirmed break higher, and thus no fresh targets topside. But I can lay out some potentials in case it does get confirmed in the meantime. Thus the primary potential will be up in the 115.90 area, and the secondary harder to reach potential will be up in the 116.40 area. Both of these would only come into true force on a confirmed break higher. So far today, a reactionary move back down, just breaking through that bright red breached upper trend line of the bright red ascending wedge pattern and dipping down within that January 22 to February 22 congestion zone. Table, AK sterling against the US dollar. A second bullish long white Mariposa yesterday, punching up and closing over the combination of the flatlining mauve medium moving average, currently 133.98, and the gold long moving average, also currently 133.98, as well as the 2024 high at 133.34, and most significantly reaching the topside dark blue upper tine, currently 134.53, of the breached but seemingly repaired dark blue late January to late April bearish shift pitchfork, one of the two recent showrunners here. This move up all started from the market easing or basing on the other showrunner here, which is the purple lower time below, currently at 132.79, of the purple late October 25 to late March 2026 quite large bullish shift pitchfork. Going back to the moving averages for a moment, the previously mentioned medium mauve moving average and the gold long moving average, along with the green short medium moving average, currently that one's at 133.66, all these three together formed as a result of this pattern a bow tie formation, or looking like a bow tie formation on about the 15th of July, and it was a bearish one. Thus, as a result of this pattern, we might see some volatility between about the 5th to the 12th of August, so watch out. There are two contradictory main patterns here. Additionally, with all the action this week, I've come awfully close to making a weekly key reversal here. The high this week is 134.76, and we will need to reach 134.81 or higher to qualify, so please just keep an eye on that. In the bigger picture, it seems we are still travelling slowly lower within the bright red, many times breached and broken, but seemingly repaired, start of July to start of August 2025, shallow bear channel, currently 128.58 to 134.85. As you can see, we are awfully close to the bright red upper bear channel line at the moment. So far today, a reactionary move back down through the dark blue upper time, pushing through the 2024 high, but halting ahead of the combined mauve medium moving average and gold long moving average right now. US dollar against the Japanese yen. One hell of a bearish long black Maribosa yesterday, pushing down through all sorts of supports, but ultimately being held up by a combination of the rising gold long moving average, currently 158.02, and the bright pink lower time, currently at 157.89, of a new pattern here, the bright pink early February to early May bullish shift pitchfork. The close itself was interesting as we finished up on the 50% Fibonacci line of the most recent action here, the early May to late July move at 159.54, just under the May 1990 high at 159.61. This move down ripped through the bottom of three other bullish patterns here, patterns that had shown the way higher in some cases since last year. They are the bright red September/November 25 to date bull channel, has become an ascending wedge pattern, that's currently 160 even to 164.96. The dark blue September 25 to late January 26 bullish shift pitchfork, and the bright green early February to early May bullish Andrews pitchfork. And we are just under the bright green we're just under the bright green lower time above, which is currently at where are we now? 164. No, sorry, my apologies. That's at 161.26. There is one other observation I'd like to make, and it's a seasonality one that I cannot verify until at least late October. Now, if you look at the daily chart, you will see we've had a big move down in late January, then another 3 months later in early May, and then another again yesterday, about 3 months after the one in early May. To have two such moves down would be a coincidence, but to have three such moves down, each time approximately 3 months separation, well, that indicates the possibility of the construction of a pattern. Hence, I would ask you all to pay attention towards the end of October and the first few days of November in case we have a similarly 3-month heartbeat pattern. There is one other pattern I would also ask you to consider, as we are now set up with big move yesterday to have a monthly key reversal for July. Thus, if we close tonight either over 162.54 or under 159.26, then we're beyond. Anything in between will have a lesser outside month pattern. Right now we're looking at an outside month pattern for July. So far today, a dip and reactionary move back up to the breached bright red uptrend and the flatlining mauve medium moving average, which is kind of 160.08, just above that at the moment. US dollar against the CNH, the offshore Chinese yuan. A really interesting move lower yesterday. It was a second bearish black crow and a follow-on low to the previous session's counter to the counter key reversal down and bearish engulfing pattern. Prices broke down through the bottom and closed below the recent makeshift bear channel, which had been made up between the green short medium moving average, currently at 678.05, and the dark blue middle time, currently 674.97, of the mid-January to early March mildly bearish shift pitchfork, closing just below the dark blue middle time. This mildly bearish pitchfork has been and it still is the brilliant showrunner here since late winter, and has done an excellent job of showing the bearish angle of attack of the market. However, that was not really the interesting bit, important as it was. It was the move down and close below, if only just, firstly, the 50% Fibonacci line of the big old May 20 to March 22 move at 675.06. And secondly, it was the lowest low and low close since February 2023, a significant event. So far today, a small, very small follow-on lower, but then a reactionary move back up over the dark blue middle tine and the 50% Fibonacci line, but only just on both. US dollar against the Brazilian real. A really interesting bearish open and close black Maribosa yesterday after the previous session's long-legged indecisive spinning top. A second consecutive pattern of that same type. This time it was also a possible indecisive doji cross as well as an outside day. That last one being a pretty interesting one to manage. The market dropped down and punched down through the green short medium moving average, currently at 510.50, and the mauve medium moving average, currently at 508.40, as well as the congestion at 508.16, before slowing down and closing just ahead of the next support, the May 24 low at 504.32. Further down we have a pair of 50% Fibonacci lines as supports of the July 19 to December 24 move at 501.48. and the October 2018 to December 24 move at 494.74. Overall, the market continued to move down nicely within the now veteran and very successful dark blue mid-December 24 to mid-April 25 bearish shift pitch hook. This long-running dark blue bearish shift pitch hook is still the very excellent showrunner here for this market. Prices are in between the overhead dark blue upper time, currently at 516.56, and the dark blue middle time below, currently at 490.65. There's one other feature we might have, but it will depend on today's action. We are awfully close to making a weekly key reversal this week, and if we have to follow through lower today, we most likely will have. Hence, watch out to see if prices drop below the May 24 low and then either close below 508.37 or over 511.19. At the moment, they're not looking like they're dropping. There is no follow through. US dollar against the Mexican peso. An interesting bearish closing black Maribosa yesterday after the previous session's indecisive doji cross. And that was the fourth consecutive indecisive pattern seen in recent days. It was the lowest low and low close since late June and was a breakout of the recent constrictions of the attractor of the 2017 low at 1743.74, along with the resistance above of the mauve medium moving average, currently 1744.74. and the support of the green short medium moving average, currently 1739.74. In the bigger picture, prices continue moving along nicely in between the dark blue lower time below, which is currently at 1721.60, and the dark blue middle time above, currently 1775.35, of the excellent showrunner here of the mildly bullish mid-February to mid-April dark blue bullish shift pitch hook. So far today, a small reactionary move higher, but not really approaching the green short medium moving average from below and looking like an indecisive doji cross right now. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.